All right, guys, welcome to our first episode of Closing with Casey. So today we have my boss and the owner, the president, the CEO of Golden Gate Mortgage. So, David.
Yes, ma'am.
Meet the world.
Hello, world. Nice to meet you. Very, very pleasant to be here. I love that long list of titles I was just called. Makes you feel important.
So let's start from the beginning.
Okay.
How did you first get into the mortgage industry?
So it's 1996. The job market's pretty bad. It's back in those times we sent out 500 resumes to all these different people and hoped for a response. And I think the only response I got was selling supplemental insurance, 100% commission. So for a while, I was working for a furniture rental company, trying to make ends meet, trying to get in that job market. I've always wanted to be a banker like my father, who was a banker for 30 plus years. And finally, I got a call from Columbia, from a guy that had a job opening at Household Finance Company in Columbia. And he's going to give me $1,000 sign-on bonus to come over there. Back then, that was big money. So I immediately accepted and started my career in the finance business at Household Finance in 1996.
So when did you decide to start Golden Gate?
99. So probably the decision was 98. So it's a combination of several things. Number one, it's difficult to explain the gridlock and this commercial, red tape that was in my way. I wanted to help people, and I couldn't stand it when a loan got denied. And one of my superiors even told me, like, you don't work for the client, you work for me. And I hated that. And I wasn't able to access the lowest interest rate, so I couldn't work with my friends or people that were close to me, people in my network, because I didn't have competitive rates. So those two things compelled me to start my own business so I could have control over what kind of pricing I had, and also could create a culture where I don't work for me or for the Golden Gate. I do work for the client.
What was the first year of business like?
It was amazing. And I think that's key in being successful is the reward of simply going to the bank. And I remember it vividly, going through the drive-through and making a deposit in the Golden Gate Mortgage account. And it was the money that I earned on my first loan. Is almost addictive. So I really wanted to keep that afloat. So we worked really, really hard. And we made a lot of outbound calls back in those days. They were able to generate some business. And I had 4 or 5 guys doing the same thing as I was. And one loan at a time, we were able to pay the bills month in and month out. And here we are 26 years later.
Yeah, we're going to be celebrating our 26th, or I guess we already did. It kind of came and went.
That's right.
But
time flies.
We'll be having
when
some
you're having
kind
fun,
of
right?
So what would you say are some of the biggest differences in the mortgage industry today versus in 1999?
Great question. So in 99, at least for Golden Gate, we're mostly doing rate and term refinances. We were trying to figure out ways to combat the finance companies that were on every corner, charging people at that time 12 and 13%. So that was our main objective, was calling, contacting people that were paying a higher rate, offering them a lower rate, lower rate at Golden Gate. So it evolved, and it always happens in cycles, or something happens. Like in 2006, there was this huge implosion of the subprime market. So we're kind of forced to make some decisions. And I think a lot of our competitors either got out of business or they got bought out by big retail. We hung in there in 2006. I remember we closed 4 loans one month. We normally close 25 to 30. So you could tell what that did to our bottom line. Next month we closed 9, but we reinvented ourselves. We got South Carolina State Housing at the time. We started doing VA loans, USDA loans, FHA loans, conventional loans. We reinvented ourselves and did all those types of programs and began to be more diverse and do more purchases, do more refinances as well, and put ourselves in a position where we could survive. And same thing, one loan at a time. We kept paying the bills.
Yeah. I can't imagine what that was like back then.
It's crazy.
I'm glad that I was not around. Well,
I
was around, but I wasn't doing mortgages.
You would have been just fine. You would have been just fine.
So what would you say is the biggest misconception about mortgage brokers versus retail?
Well, it's regional. So, for example, up north, everybody's got a mortgage broker, right? Nobody goes to the bank for a mortgage. That's crazy. You got to have a mortgage broker. Down here, it's kind of different. Everybody goes to a bank or feels like there's more prestige or more authenticity by going to a bank versus a broker who's got all these, high fees and high interest rates. So that's the biggest misconception is, Golden Gate, we don't charge excessive fees. We don't even charge a broker fee. There's nothing up front, as a matter of fact. I think a lot of our competitors collect money up front. We don't even do that. So we're going to get a lower interest rate, lower fees. We have control over these fees and these interest rates, as we talked about earlier, is one of the reasons I'm a broker. So I can charge people less. So that's probably the biggest misconception that people have is I don't want to use a mortgage broker because they have fees. You know, it's the exact opposite. We have multiple choices, 20 plus different lenders. So we're on the buyer side, the client side of the desk, looking at these 27 different people and trying to figure out which one of these loans is best for my client. Not the other way around where I have all these programs, which one are you going to fit into? It's the exact opposite.
Right.
So I think that's the two biggest misconceptions is that we are going to be higher fees. There's actually an article, it was written in 2024. The average retail company charges just over 2% in origination fees. We typically charge zero. So it's way different than what people think. And they should really at least look at a mortgage broker before they make a decision on their loan.
Yeah. So would you say that's what sets us apart from other brokers?
Culture. I think my father was a banker, so he's worked with different professions his entire life. Plumbers, electricians, you name it, he's worked with them. And one of the things he told me was he's seen so many people chase money, but he's never seen anybody catch it. And I think that mantra stuck with me, and maybe it's the reason why we're here today is we don't chase money. We really do focus on the client and their experience from start to finish. That is what is our reward, their satisfaction, their happiness. Um, that's what we focus on here at Golden Gate. And I think that it catches on and it relieves people of a lot of anxiety that they have. Um, I've never fired anybody over lack of production ever in 26 years.
Right.
So it's all about taking care of the client, creating a culture that's successful, that's fun, that's enjoyable. And I think that trickles down to our clients and their client experience.
And let's talk about some first-time home buyers. What would be your best advice to give to first-time home buyers?
Yeah, there's so many different options, but don't get caught up in the first-time home buyer thing. There's plenty of opportunities. There's plenty of discounts that you'll get, but it's mostly in the form of a little bit lower interest rate, a little bit lower mortgage insurance. But the down payments are generally the same, 3%, 1%, 5%. The more you put down, the better pricing you're going to get, the lower payment you're going to get. So I still believe in putting that 3 to 5% down. That's I would tell my daughter, start saving now for your down payment. It's going to pay off in the long run. You've already, said that they're home buyers. That's my biggest advice is to be a home buyer, to own a home as soon as you can, because that is your wealth building engine. Most people, when they're 50, 55, 60, their wealth is in their real estate, their house that they own. So if you bought when you're 25 years old, you've got a couple $100,000 in equity. It's really hard to save a couple $100,000, but if you save this money in the form of making a mortgage payment every month, it just should become a part of your monthly budget versus renting and paying someone else's mortgage and building someone else's
100% interest.
equity. Yeah, exactly.
So what would you say are the most common mistakes that buyers can make during the home loan process?
Not shopping. They need to talk to a mortgage broker. They want to get the best deal. And they need advice. They need guidance. There's a lot of programs out there that people try to sell you on. No money down, for example, could have a higher interest rate. They could have extra fees that puts pressure on the seller. It might put pressure on your real estate agent to come up with seller paid closing costs. It might affect the price that you're paying for the property. So I think that's probably the biggest thing is to be aware of what your options are and to have control over the situation. Don't be caught with no money to put down. Start saving now. Don't be caught or need these special programs that may or may not benefit you. Don't limit yourself to just one program. Call a broker and find out what your options really are, and then make the right decision for you and your situation.
Cool. Well, we're going to switch gears again.
Okay.
So, how do you find and train loan officers that work at Golden Gate Mortgage?
Fantastic question. I think that throughout my career, there's not been a heavy influence on recruiting or growing. Um, I think that quantity is the enemy of quality. I think if you have people that are out recruiting, trying to build something, that they sometimes lose the reason they were there in the first place. And that was all for a culture where we work for the client. So a lot of people that have hired here, somebody I already know, or somebody that was referred to somebody that I already know, um, somebody that's been in the business for a while and wanted change, wanted a fresh start, wanted to have less gridlock, less corporate involvement, and wanted to focus more on helping the client versus helping their boss or company. I think that's my leadership style, is one of support, but trying to get out of your way so you can go in the direction that you were born to go in.
So where would you say that the housing market is going? Where do you see the housing market being in the next 3 years?
Another great question. So I don't know. And I think there's a lot of people that don't have the courage to say that. I think that people need to assess their individual circumstances. Don't listen to the pundit. Don't listen to the media. Don't listen to the news. Don't listen to people like me that are trying to tell you something that they don't know. Assess your current situation. And I think that building a home or buying a home is going to pay off in the long run, period. It stands the test of time. It is going to pay off. It might take 5 years, 10 years, 15 years, whatever, but it's going to pay off.
So what's next? What's next for Golden Gate?
So we're going to pay our bills this month, try to pay our bills next month, and see what happens. I mean, I feel still that we're young. My third time, my father's 86, still working, 6, 7 hours a day. So that's 30 years from now. So I don't see any real change for the next 20, 30 years for Golden Gate. Yeah. Hopefully we'll be here for a long time for the citizens of South Carolina and North Carolina and Georgia.
Right. And hopefully some more.
That's right.
Hopefully we get licensed in a few more states.
Right.
So we can help people in all over.
Right.
All right. Final question.
Yeah.
What's your go-to coffee order or work day snack?
Coffee order is just a regular old latte. If we're going to Starbucks, if it's here, it's just coffee with cream. But a snack, probably going to be like an energy drink or something. You gotta stay hydrated, Casey.
Yeah.
I don't know about a snack. You probably have some good ideas.
Yeah.
Also snacks.
Well, my nickname is Snacks.
Is that right?
So yeah,
Casey Snacks.
Chris Marr calls me Snacks.
Maybe that's an unfair nickname.
Well, I don't know, because I do love a snack. But we're pretty guilty of Earth Fair Hot Bar. Yeah. How many times? Just so you know, if you can't find David at Golden Gate, you can find him at the Hot Bar at Earth Fair. How many times would you say we've run into each other at the Hot Bar at Earth Fair?
Let's see, 4 years, that's 52 weeks, that's 200 days. Let's see. I'd say about 90.
Yeah. It's
between 80 and 100, something like that.
And honestly, anytime I see you, I always want to make contact, because then you always buy my lunch.
Yeah.
So,
sucker.
So that's
really fun. A lot, 80, 90, now that I'm thinking about it.
I know.
Hey, just let me give me free lunch.
Right.
I see how I'm on to you now, though.
Well, thank you.
Of course.
This has been fun. Yeah. And, hopefully we'll have some more great people joining our little YouTube channel. So subscribe to our channel for more, mortgage tips. And stay tuned. We got a lot to talk about. This is a crazy business and a crazy time in the mortgage business. So we're going to get to all of it.
A lot of cases for Casey.
A lot of case of the days with Casey Sharp. Yeah. Well, thank you, David.